Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 1st. 25 basis points. Fed interest rate decision increases the interest rate to 4.75, quarter of 0.25% from 4.5. Apart from that, that's the big news but expected. Let's do a quick recap of the previous economic data that we got at 10 a.m. Jobs opening way higher than expected. More job openings, more opportunities for employees, for people to look for better employment. That's typically not good. A lot of jobs are still opening. Companies are still looking and opening a lot of jobs, of vacancies. Look at this increase from 10.44 millions to 11 million. ISM manufacturing PMI came a little bit lower, but I think this JOLTS data is quite concerning for the labor market. Job quits, however, got a little bit lower, so people are not quitting. People are just not willing to accept certain jobs, so companies are still continuing, putting more openings, more vacancies. But the big information for today news is 25 basis points. It's not only the interest rate decision, but also what they have to say about the guidance. And that guidance, the statement that they shared is quite concerning. They know that inflation is still somewhat elevated. Markets were looking for signs that the Fed were going to end the rate increases soon. These markets were pricing in that this was the last 25 basis points of the year. Remember that we've been in this channel covering yields, terminal rate, and for April it was 4.8. Well, it happened. We are 4.75, 4.80%. But they, look at this, they say that they need to ongoing increases in the target range. So they think they will continue hiking interest rates. Well, if you were looking for Fed pivot or the just stop increasing rates, well, they are again saying no, we will continue because inflation is still high. Officials say that they would determine the extent of future rate increases based on factors such as some policies that lag, for example, the pace of labor market, certain economic data lags behind. So depending on those economic data in the upcoming weeks and months, they will decide on the extent. But what is clear is that they are going to continue increasing rates this year. Well, I think that's not expected by the market. We were expecting the 0.25, but let's see how market reacted to that. Because as you can see, this is the Nasdaq. Nasdaq went lower, then ripped, and now it's unable to go higher. We reached 12,200, but we are unable to reach higher. This is a big resistance, horizontal resistance on the Nasdaq and also on the ES. This is what I was expecting. On the ES, we still have this kind of big rejection of the latest CPI on Tuesday, 13th of December, sorry. So be careful because, yes, Fed raised 25 basis points, but the most important thing is their guidance, what they say regarding the future. And as you can see, Markets are not liking these kind of things. Point of control is still down there. We can still hope for hold, but Apple is rejecting point of control. Microsoft still above, Tesla above, but Apple is not buying this news. Throughout all today, we've been chopping around and going lower. We are on Apple minus 1.30 because Apple is the most important stock on the Nasdaq, and I think is quite sensible on the amount of interest rates that they're going to achieve. But let's take a look to the 2-year, that it's continuing higher. The yield and the 10-year both are higher. We will have to see tomorrow how they end up, because as you can see, the April terminal rate on the yield was 4.8. But if Feds are already saying this is not the last hike that we are going to do on 2023, we might see a spike higher on the yields, on the futures, and the terminal rates on April and September and December might change. Remember what I've been sharing throughout all these videos in this channel. Market price in these last 25 basis points as the last hike of the year, and also priced in on December a cut of 25 basis points. Fed were saying we are going to be at 5 or more, and there will be no cuts on 2023. Well, this is what happens. Markets go ahead of expectations, and sometimes they fail. And I think this is what's happening. What is happening? It's rejection, choppiness, and a quite clear Fed saying this is not going to be the last one. But we'll have to see. Looks like we are trying to hold settlement, but we need time for it to digest, for big hedge funds and big players to digest the news and see if we move higher through this red resistance that we got on the daily. I'm not trading today. I'm just expecting, and more than that, knowing what the statement said, I think it's not worth the risk. Right now, I don't have a clear picture. I'm not confident. I don't like this kind of statement, but we'll have to see. Don't predict, just react. Right now, I don't see anything for trading. So that's my take on this. I think we have to wait for tomorrow. Remember that we have also tomorrow news, initial jobless claims and continuing jobless claims, and on Friday, unemployment rate and non-farm payrolls. These are also key. So week is still playing, it's still ongoing. So just wait, be patient, and let the market react and digest the news. This is super important. I'm gonna wait, and tomorrow I will take some decisions. I will evaluate, I will analyze, and we can take decisions with risk in mind. Let's take a look to the FOMC FedWatch tool that is now updated. In 48 days, there will be another FOMC meeting, and it's not updated. Yeah, it's probabilities for one. Let's see that it's not updated. The next one is the 22 of March. So a lot of people is saying 86% is pricing in 25 again, from 450 or 475 to 5. So we'll have to see if this is updated or not. Anyway, these are news. This is the market. This is what we were waiting for. Some good news. 25 basis points. 50 would have killed the market. But as you can see, it's not a strong move. So something is is tricky here. Something doesn't look quite good. So I'm gonna wait. I will provide tomorrow more insight after today, because we need some time to analyze what kind of message they are providing to the markets. In my opinion, honestly, I think Fed are trying to explain to the market, we are going to continue in raising interest rates. Be careful. This is my take. I think markets are not prepared for another interest rate hike. They were expecting this was going to be the last one, and remember that we are pricing in cuts this year and also no more hikes. We were not expecting this, and this is quite bad news for the Nasdaq and for tech stocks. We'll have to see. So patience, react, and don't predict. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time. And remember, the trading day is not over yet. We have had a pretty choppy day, and these news I think are concerning. So if you are not confident, just step back and wait for tomorrow until the big players and the market digest the news. Discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow.